order block just underneath, and your entry would be somewhat similar. You've just got that added criteria in there. So that is entry number three. To be quite honest, and other than that, those are the higher probable entries that I would be looking to take myself. The other scenario is, let's say, for example, price really doesn't respect the area in the entirety, and Asia opens and just starts trending up. Then you guys know exactly what I'm going to do. Because we're in a high probable area, and I really would like to be taking that short position, I'm not going to force it, but you know exactly what I must wait for first. It has to be a bearish engulfing 15-minute candle. And why I say it, it just helps to build the base. You can't jump in simply on doing things like, if you imagine this is just a quick break of structure, because more often than not, I will take these aggressive entries, but they've got to be here. They've got to be at some really nice points of interest, not in the middle of nowhere. I hope that makes sense. I'm more than happy to take tap entries, aggressive 1 minute breaks of structures, any type of setup, but it's not what it is, it's where it is. So if I'm in the middle of nowhere, just to really hammer it home, that's not good enough. A quick break of structure like that, and then I locate a little 1 minute order block like so, it's just not good enough. What I need to do in order to feel happy to risk a couple of £1,000 per trade to paint the picture for you all, that's why I keep going on about it. I need to see a bearish engulfing candle. Why? It's going to be boring. I know you've heard of it. Once I see a candle do that and engulfs a couple of candles to the left-hand side, that then gives me everything I need anyway. So more often than not, I'm going to have a wick to the high, just like so. And instead of waiting for that small lower time frame break of structure, once I wait for this, within this bearish engulfing 15-minute candle, I already have this. I already have those miniature 1 minute breaks of structure. Then, I know you're bored of hearing it, but it's got to be said. Order block time. Locate it. It will be created as a result of this bearish engulfing candle. So this trend is in that candle. As simple as this. Once price then comes back, you've got the option. Take it aggressive from there. Just trust me, there will be a 1 minute order block there. Take it as a tap entry from or a limit entry from that order block like that, or you got the added icing on the cake yet again, because by the time this happens, as you can see, we are going to be bullish. So it's just the risk of trading. We are going to be bullish, even with that bearish engulfing. That's why I said at least wait for that at the very least. Then when price pulls back up, you've got entry model number one, where you take the tap on the limit, or secondly, you just get that additional added cherry on the cake. That 1 minute breaker structure, repeat the process again, and off you go to take a short. So there's me planning in the good scenario of price actually respecting our points of interest. But I've also got a plan when price doesn't respect my point of interest. But because I'm aware of what could happen in and around this area of the 50 EMA, and just to paint the picture, and I promise I'll move on to the next, how this is going to look on the 4 hour. Let's say we've got that EMA like so. On the 4 hour, all of this bullshitting around to the left here, all that is on the 4 hour is the candle doing that above the 4 hour 50 EMA. That's all it's doing. So always have in the back of your mind what's going on in the higher time frame. Of course, if that 4 hour candle then closes above that 4 hour 50 EMA, we're out of sync because we're then expecting that. However, so long as you've got a couple of hours left of this 4 hour candle close and you know this 4 hour candle is above the 4 hour 50 EMA, you got to be looking for this. Once you've found that, trust your analysis and expect that the 4 hour candle is simply going to do this, get you to break even, heading towards take profits, then it's going to flip bearish, and then it's just going to simply leave you with a wick. You have entered on that wick up here, and that is exactly this, all happening on that wick. So to you guys that are here, does that make sense?
Happy days.
Yeah, good stuff. That is me explaining it to the best of my abilities with that 4 hour, expect the rejection while we wait for that bearish engulfing candle, not just wait for these quick 1 minute breaks of structures. Wait for the 15. That is your 1 minute break of structure anyway. Then be patient enough to wait for price to come back into the area of imbalance left behind. It will be there, trust me. Then you've got the option to take the sell limit from that 1 minute order block, or if you've got the time, wait for another shift because you will be bullish. Just gain that additional confluence, take the short, and it is what it is. It's going to win or it's going to lose, it's going to go break even. There's no more to be said about it. And then finally, just in terms of targets, now if we go back to the higher time frame, because we do know we are trading with the 4 hour 50 EMA, that's grand. So we know then our targets, our next EMA is the daily before we're expecting a rejection. So if this plays out tomorrow morning and I get into a position here, although I may well be able to take an Asia range fill, I will be holding this position down to that daily 50 EMA without any doubt. I just have to, especially if we then break this first and then come back to that area, and the Asia fill will already have been filled, so my initial target is gone, then I am 100% holding this trade down to the daily 50 EMA. Of course, tomorrow morning it's going to be a little bit higher, but the target will remain the same. So I hope that's clear as well. Once your initial target on that Asia range fill has been met by the break of structure, your next target is not, we're not trading support and resistance, we're trading smart money concepts, and we with the addition of EMAs as confluences, and we know looking at EMAs that once price comes towards those EMAs, we're going to be looking as a rejection. Even look at the daily. Price comes down, rejects. Price comes down, rejects. So once price starts coming down, we can expect a rejection from that daily 50 EMA. It's not our job to expect when. We just know when it gets towards it, it's going to reject. So we need to be break even and start looking at closing profits. But for sure, I will not be closing profits by here. I'm going to let that trade run down to much closer to that daily 50 EMA. How close? Couldn't tell you just yet, but there is definitely a 1 to 5 available. I'll even say definitely a 1 to 6 available. So as long as the entry is spot on, even better if we can get in up here and then ride it all the way down. That would be perfect. 1 to 10. Easy money. So that is UJ covered. Really nice pair to have a look at to begin the analysis, to be quite honest, come tomorrow morning. And look how scruffy we've done it, but I hope you guys can make sense of all of this mess. So that's UJ. Let me give that a green thumbs up, and I will bring that to the top for now. In fact, let's make it pink. So, oh, sugars. Oh, blimey. So I've just deleted two pairs. Um, let's bring that back. Sorry, guys. US dollar, JPY. I need to add that back in. And what else did I delete? GU, EU, AU, I deleted as well. Water plonker. AU has been re-added. Cool. Right, let's just quickly head to the DXY, get that nailed out very quickly. Weekly time frame is where it's most important for me. Oh, load fell. Can you guys still see the screen?
Yes.
Okay, good stuff. Thank you. DXY. Well, we forecasted ages and ages and ages ago that there would be, oh yeah, this is running quite slow, a rejection from this weekly order block. Much of the same reason why I couldn't take buy positions on EG last week or for the past couple of weeks, because as soon as you find or locate a weekly higher time frame order block, you simply cannot take buys into it, even if it just aligns to perfection. We are expecting rejection from a weekly order block, and we now have that weekly EMAs come down as well to support that. So the DXY was well and truly in. I know it's hard to believe now, but it was in a bearish. There was a bearish sentiment towards it, although it fucked around within the weeks. You could foresee that it's coming down based on the weekly 50 MA and that weekly order block. So, anyway, here and now, where are we? So, in terms of structure, you guys know